All right. Good morning, everybody. We made it through Powell on the Hill. Looks like we're going to get the start of the reciprocal tariffs today, or today he'll, do what he's been doing with a lot of these and put them up, put them on, and then put them on pause. Either way, it's going to cause uncertainty, very likely going to cause some volatility. Want to be prepared for that. And we're going to get PPI today. We had CPI, now we get PPI, and it all just ties together towards the Fed's dual mandate between employment and the rates and the rate situation. We are going to get some unemployment data today. It's not the big data that we're looking for, but it is important data. Anything that goes towards employment is important. Always want to pay attention to those headlines when we get them. So we could say the UK down 0.5%, S&P basically flat, Dow, small caps. They're all just holding the line, waiting. We've got some auctions today, including the 30-year bond. That one's no joke right there. You definitely want to pay attention to that. It has meaningful impact on the market. So watch the clock, 1 p.m. today. Don't let that one sneak by. And there's some talk about ending the Ukraine war. There's a lot that goes into that, but watch for crude and gold if we get more headlines on that war. It's very likely going to affect those two the most on the short term. So looking at the options, we were messing around with the volatility trigger yesterday, and it looks like the S&P, if you're looking at the SPX, closed underneath that volatility trigger and just wasn't able to get back above it. But on the ES, we've got 0 gamma underneath us. We're crossing back and forth between the volatility trigger, and the put wall is basically yesterday's low around that 10-week moving average. So we've got a lot of support if we look at those three things. It's yesterday's low, it's the put wall, it's the 10-week moving average, 60.26 or 60.32 cog line. There's just a lot of structure down here. We found it Sunday in the overnight. We found it yesterday afternoon or yesterday morning. It's a level you want to keep particular attention on if we break this Globex low that we have established and get through that 60.50 level. Just keep in mind we got 60.50, 60.32, and then all these other levels. There's 60.50 options and 60.32 cog line. If we just take a moment on the daily, we're building this kind of wedge, and we're still trapped inside of this one big bar. Now, IX10 patterns, they're more exciting when you find them in a really small compressed range. And with a big day like this from February 10, that's not exactly a nice, tight, small range. But it is the range that we're working with. So we got to get out of that box. You can see the long wicks along the bottom that after that big bar was made, when we did try breaking down through it, we just kept getting bid back up again. It's basically 60.50, right? When we kind of think about the midpoint of this big bar, 60.55, a little bit underneath it, maybe one way or the other. So it's a critical level we got to hold. It's likely that if we close below the midpoint of that big bar, get below that 60.50, then we don't have anything else below that put wall that's going to help us. And we'll be able to move towards that put wall with strength if we get that close below. So we want to see this defense continue. You're not helping. So looking at the average daily range, we're flat. So we're really no edge closer to one side or the other this morning. It's worth noting that we can challenge the lower edge without breaking out of yesterday's range. But if we want to challenge the upside, we've got to get outside of yesterday's range. When we look at it from that point, it's easier to believe we can hit that lower one because the requirements are less. And it's above a lot of those levels that I had just pointed out too. Today's floor pivot is lower than yesterday. That's bearish, but price opened above it, so it's considered bullish. Those two kind of cancel each other out. We've already hit it, so we don't have an MDP or a missed daily pivot looming over our head. And we're still holding above the weekly floor pivot, which puts us in a mildly bullish bias just because we're above it. Not really a lot of insight on the week's profile other than we're below the greatest amount of volume, the point of control. And if we want to make that run to the upside, it's going to be the trouble we have to get through. 60.86. The value area high, 60.92 cog line. It's a really narrow profile too. It's a little hard to see it in all of this, but these are really clear lower highs and lower lows, except for here when we started to turn things around. Spot Gamma the other day had talked about grabbing some cheap lottos, especially on the call side. I don't think that would be a bad idea. What I keep coming back to though is this area and that dump underneath that high. Now you got this area underneath that high. And we've got that concern for a dump. The problem is, as we were looking at yesterday, calls right now are more expensive than puts. That's the way the skew is right now. So if you're looking for cheap lotto calls, they're not as cheap as it sounds. 10-day, 30-minute profile, we're not expecting any change here anytime soon. If we do get a change, it won't be by much. It'll drop from 60.88 down to 60.70. And this entire thing is a zone we're going to have a hard time getting away from. And the longer we're here building it up, the more structure there's going to be. no new VPOC from yesterday. And this morning so far, we've got more volume down here in the 60-70 range, but we've had more trades up in the 60-83 area. Looking at things for the week, we're still holding above last Friday's close, but we haven't yet tested the upper edge of the week. Really, we haven't tested either edge. It's been a long time since we've had a week where we didn't hit either edge. And I'm starting to like some long, cheap calls more and more. .75% above the 10-week. It's not quite far enough. We're still close enough that we can get stuck and get drawn back to it. So we want this to get a little farther away, say at least 1% above that 10-week. But we are above it. It's a good start. Just needs to hold. Continue to push. Certainly shows that we're not overbought, we're not overextended. It doesn't owe us any sort of pullback on the weekly. On the daily, we're back below the 10. We're just crossing back and forth. It has no support, no structure, but it is like a gravity. So we're just rotating around it. We got to break away from it. Looking at things that are down this morning, gold, Bitcoin, China. And really that's what we've got, down more than 0.5%. We look at what's up. Nat gas, gold again. The other direction, that's Thinkorswim being a little goofy. And bonds are up. So airlines has this really big gap down. It's kind of hard to see because it's just an algo print, but it's down here at 25.33. Now it is just a print. We'd want to see, a couple of candles get built out before we really consider that to be a true print. Otherwise, it can be like what we had last night, and then it was back up here. Now it's back down here. So I wouldn't put too much weight in that. But if you look at the MACD, I mean, it's rolled over. It's continuing to point to the downside. And while it's not under the zero line yet, it's heading in that direction. So we've certainly got divergence between that and what price has been doing. But it hasn't broke trend yet. So, airlines, they're still holding. China with a big gap down, island. It's not an island reversal yet. It's just an island. This would need to gap back up before it's an island reversal. And as we were talking about the other day, these China ETFs, they're going to be really gappy products. So if you are trying to trade them, just get used to that big gappiness. Crude down. I think if we hear more out of Ukraine today, we're going to see more of this. Bitcoin down, China down. Now we got chips down a little bit. It's not down enough. We need 0.5%, and we're not there. But you're not going to get a rally in the S&P or in the NASDAQ without those three main sectors: technology, consumer discretionary, financials. And when we say tech, well, I mean, that can be cloud computing, semiconductors, communications. It broadens out quite a bit. We need this flat at least if we're going to get a rally breakout in the indexes. We can't have that going down while we're trying to go up. So it needs to get back to flat, stop falling at the bare minimum, and participate in the rally really would be better. Gap up in uranium, but it's just a print. We need some candles up there. We can see if we look at the daily, we got this really big bar from January 27. And when we've tried to get near that high or test that high, we've had a lot of defense, a lot of selling here, these wicks. So there's still a lot of liquidity up there. We don't know how much is left, and we won't know. We just have to get a candle to drive through it and try getting this gap closed at around 30.70. So it's got a lot of work to do. It's very likely that any news on the Ukraine war ending, it's going to whack gold to the downside. That's the base case argument. It doesn't have to, right? Price can always do whatever it wants, but that would be the base case idea, is that a reduction in war would generate a reduction in safe haven assets and products, and gold always fits that category. So be careful if you're still heavy in this to the upside. We have a little move up in bonds. We hit the anchored VWAP. This is the year-to-date VWAP. So we hit it yesterday, broke it. We're struggling to get back through it today. If you're looking at TLT, use the midpoint of yesterday as a line that we've got to get through. $87.76. So I think throughout the day today, you're definitely going to want to keep your eye on the news. It's possible that PPI has enough to give us what we're looking for, and possibly we could even see some gap close play like we played on CPI. It's always possible, but it's likely that the headlines on the war and tariffs are going to overshadow anything that we get from PPI today. They're not hedging it this morning the way that they were hedging CPI either. Right? We've got a lot of trade volume in the overnight, and we don't have a market maker move showing. So they're not hedging it like the other one. It's almost as if this one doesn't have them so anxious. After the 30-year should be good for the rest of the afternoon, other than whatever we can get out of the news. But that 30-year, don't let that one slip by you. That one can be a big one. I know it's kind of sleepy. People don't look at these auctions. Seems like I'm the only one, but I do it for a reason. So keep your eye on the clock. Watch the news. I'll see y'all tomorrow.